Pensions Partnership here. And this is being streamed live, so can we mute ourselves and blind ourselves, if that's the right expression, when we're not speaking? Ian, I keep meaning to ask you, are you intending to put some of these reports up on the screen? Are we doing share screen for the reports, or are we assuming that people are just going to have them to one hand and read them as we go through?
Oh, you put me under far too much pressure there, Chair. I don't think I have the technological capability to do that at this stage. The intention is that people refer to them themselves, Chair.
Okay, all right. Well, that's the way we'll do it then, in which case. Do we have any apologies for absence?
No, we don't.
No, good, thank you. The minutes of the meeting held on the 1st of October are on pages 1 to 8. Have they been, can I agree those? Does anyone any comments on the minutes?
Chair, I think Nicholas Wirtz has an issue.
Nick?
Yes, thanks. I'm recorded as having sent my apologies for the last joint committee meeting. I was in fact there. If those could be amended.
Thank you. Thanks, Nick. We'll change it. Item 3, the joint committee meeting arrangements. We've actually had the arrangements. We've spent the last hour having our separate arrangements, and I think they were generally agreed. Let's see anybody else want to comment on it. They were generally agreed as being a good thing, and that we will carry on like that for the time being, until we can think of something even better. Is that a fair summary of what was said? Or do we need to discuss this paper further?
Seems a fair summary.
Ian, do you want to say any more? You wrote the paper.
No, I don't think so, Chair. I think all of the issues that we've brought out are in paragraph 2.8, and we're enacting them this time. The only thing I would say is at the end of the meeting, if we get an opportunity to just some feedback on how it's gone, or even if you just feedback to your officers afterwards, and we'll pick that up at the Officer Operations Group meeting as well.
Okay, thank you. Item 4 is COVID-19 for information and discussion. A verbal report. I'm not quite certain who was going to give a verbal report on that. Is that coming from you, Ian?
I think it's largely, Chair, it's just allow if there's anything that Rachel wants to tell us on behalf of Board at the Coast, or if there's anything any of the individual funds want to raise or discuss.
It's difficult to know what to say. We've all been through the same kind of experience. We had a lot of discussion, or some discussion, in the informal board meeting about how it affected Board of the Coast. It's obviously affected each one of our individual, the staffing on our funds in different ways. But everyone seems to have struggled through with these strange virtual meetings, talking to a screen. So I'm not aware of there being any terrible fatalities or anything amongst the people who are involved with us, although I do know, and it's perhaps a good point to raise it up, I understand that Eileen is in hospital with COVID. Is that correct? And
Yes, Chair. Yes, Eileen is in hospital. She's making a good recovery. However, some sad news. She lost her husband last week. The funeral's tomorrow. So no, she's not having the best of times, but she is making a good recovery, though. Thank you.
Thank you. So, how we formally record our best wishes to her, to say something to Eileen.
Move that.
We sympathise with her position.
Yeah, well, I'll see. I'm hoping she'll be at the funeral tomorrow, Tim, and I'll pass everybody's best wishes on. Thank you. Thank
you very much. Which I think brings us on to item 5, is the joint committee budget. It says for information and read only. If you want to tell us any more, Ian, it's a fairly short item.
Yeah, I don't think there's much in there. There's the only expenditure to date is to do with some legal work that the funds have commissioned. So there's nothing else to bring to the Joint Committee's attention.
Does anyone have any comments on the budget or any remarks they want to make or have recorded with regard to it? I'm not seeing any. No hands going up? No? Okay. So in which case, we'll take that as read. Now, item 6 is the responsible investment policies review. And this is down to Rachel to talk us through it, but we went through this very considerable length at a separate meeting, but not everybody was there. So my expectation had been that we would be able to go through this item quite quickly, but if anybody wants a big expansion on it, then please say so, and I'm sure Rachel will be happy to take us through the various points in it again, because there were 3 papers involved: a paper, the policy, review of the guidelines, etc. Nicholas. Nick?
Yeah, hi. Thanks. I just wanted to raise a point. We weren't party to some of the discussions that have taken place. But certainly from my perspective, from the Unison perspective, we absolutely support the idea of having carbon emissions targets, and we absolutely support the position taken by South Yorkshire Pension Authority. We think that's a very positive step that they have taken. And I also note that even central government has shifted forward its policy for not having vehicles powered by solely petrol or diesel by 10 years to 2030. So there is a bit of a head of a steam here, and no doubt we can thank nice Mr. Attenborough for putting this up the agenda. But my point is this, that I think South Yorkshire Pension Authority has got it right. I think the current policy position of the border to coast it owes less to strategy than probably and more to this is the position we could all the funds could put their name to. But I think perhaps we need to be a little bit more strategic about it. And I think the position adopted by South Yorkshire it points the direction of travel. And I would be for one be very pleased if border to coast adopted the position of South Yorkshire. Thank you, Chair.
Thank you for that. I've got several comments. I've got Doug, Eddie.
Thanks. Thanks, Chair. I want to piggyback that comment actually, and unfortunately I wasn't in the seminar meeting last week, so I don't have a lot of context around that discussion, if in fact anything. And I don't know South Yorkshire's position. I've not read that, and do forgive me, but I was a little bit concerned at page 19, soft copy, and point 1.3, first bullet point. Now, if I'm reading it correctly, it sounds like on the back of what has just been said that we've got no targets. And the first bullet point I read, with respect to climate change, the consensus was for no targets to be set regarding carbon emissions reduction, with the direction of travel being more important. That doesn't sit well with me. And Nicholas, thank you for recognising David Attenborough and accelerating a 10-year bring forward of EVs. I did actually write to the government to ask them to bring forward it to 2025 in a letter more recently. So, and that being in my capacity as chair of LAF. So I would like to ask the question around no targets. Is that wise, just given the importance, and we see the political spectrum changing globally, and things are moving. So I'd just like to get some narrative of how we arrived at having no targets, but a negative direction of travel is not going to sit well, but a positive direction of travel will sit well. Thank you, Chair.
Thank you. I've got a number of people who now want to come in on this, so I'm working down to this. So Eddie is next on my list.
Thank you, Chairman. Yes, I raised a question under the RI meeting we had last week with, and Rachel said to bring it up today, so I will. It's on the appendix on page 46. And it's under the heading climate change. Now, these are proposed changes, I should say. So therefore, my question is, regarding the second part of that paragraph where the TPI enables assessment, etc., and a company in a high emitting sector receives a score of 0 or 1. The question was about voting against the chair of the board. It seems strange to me that this should come in as a proposed change now, when we've been dealing with RI for the last number of years, basically. I think it's something that should have come in a lot earlier. So my question is, has anyone been taken to task over this so far, outside of this proposed change? So that's where I'm coming from. Obviously, I think we should be taking chairs and boards to task regarding climate change. And that was my question, Chairman. Thank you very much.
Thank you, Eddie. Rachel, I've got a number of other questions. I'm going to go down those first, and then I think maybe hand over to you for further comment on this report, and also where we came from and how we've got to be where we are. Councillor Everson, I don't know, Dave.
Hello, yes, I'm new to the committee. This is my first time joining you, so apologies if this is a conversation you've already had. But again, about climate change, having read the papers, it just occurred to me that with a number of authorities signing the climate change emergency documents, etc., couldn't this be extremely embarrassing for us if we're not seen to be sort of moving away or certainly being aware of the fact that we should be more accepting that you know, we are aware of climate change, and we are not we're not making investment in companies that aren't sort of doing the responsible thing.
Thank you. Mick?
Yeah, thanks, Tim. Thanks for that, Nicholas, for that endorsement for South Yorkshire. It's just for Doug. We have got the aspiration to reduce or be carbon neutral by 2030 and not 2050. So officers are going away and starting a plan to do that. But we've also got to remember responsible investments is not just about climate change. It's how we treat the workforce. It's how we engage thoroughly. So we need to look at it in the round as well as climate change. But yes, we've taken that step, and it's very positive. We did go into some detail in the previous meeting, and it was a very thought-provoking meeting because it's not only Board of the Coast that we've got to encourage to lower or raise the aspirations and lower the date to get to where we want to be. It's also individual pension funds as well. So I'm glad that South Yorkshire's taking the lead, and it'll be very positive if we can get plans throughout all the pension funds to reduce the carbon emissions or be carbon neutral by 2030.
Thanks, Mick. I mean, it does seem to me that we've all of the individual funds, I'm sure, do have change policies of these kinds. Certainly Surrey does, and I'm sure all the other ones do as well. It's how you then combine those into a policy that Board of the Coast can have that reflects all of that, whilst not leaving anybody out or not sort of going in one particular direction. I think that's what
exactly. Yeah.
But I do feel as though we'll let Rachel speak in a minute. Sorry, I have now got Victoria and Deirdre to come.
Thank you, Tim. Question to South Yorkshire about your net zero carbon emissions target by 2030. Are you able to share a little bit about how that might be achieved in terms of financial impact and risks? Just aware if we're suggesting that other partner funds try and kind of step up or keep some kind of motion in that direction themselves. It'd be nice to see how it can be implemented rather than just that we'd like to implement it. Thank you.
Can I just answer that one, Tim?
Yeah, please.
Yeah. What we have done is that we've set the target, and then we've requested that officers go away and come back with a report next year, beginning of next year, to bring back to the authority. So we will have more detail then, but I will tell you that we do get lobbied. We've got quite a big political lobby contacting all authority members, and I know myself and George have been to meetings, and Sue Ellis before me went to meetings of organisations who were lobbying, and we've listened to the arguments and agree, and therefore we're looking at plans to do that. But we also understand that we've got a duty in terms of returns for our pension fund, and so there's nothing to say that if we take funds out of organisations or we move funds to areas of responsible investment, we're going to reduce our fiduciary duty. In fact, there's ways that we could potentially improve it.
Okay, thanks, Vic. I mean, maybe you and Victoria want to talk about that sort of separately. Deirdre,
Yeah, thank you. Interesting to hear about the seminar meeting last week. I didn't get an invitation to that, and I would request that, you know, I do get invitations to any kind of seminars like that in future. But you know, I just wanted to say, at least given that there's no targets to be set regarding carbon emission reductions, at least there's a proposal to look in 2021 at a standalone climate change policy, and I think that's a good thing.
Does anyone else want to make? I've got still with hands up. I've got Eddie, Nick again, and Doug McMurdo again. Before I hand over to Board of the Coast, because they've got a lot of things to answer here.
Sorry, Chairman, just taking my hand down. Didn't realise it was still up.
Okay, Doug.
Yes, thanks, Chair, and thanks for that resume on South Yorkshire. I didn't doubt for a minute you were leading the way. It just occurred, and I think really I should not say too much and let Rachel respond, because we could be in a situation here about conflict within the underlying funds around climate, and not knowing across all the 11 funds in any detail. That might well be the issue. So I look forward to hearing from Rachel.
Thank you. So I got Patrick now. Sorry, sorry, Board of the Coast. I'm going to let Patrick speak first.
Thank you, Tim. Yeah, I was glad to hear Mick also mention fiduciary duty in this discussion, because I think it's very significant for us as the representatives of our stakeholders. And I think in 4.8 in the report, it's saying we currently have no restrictions or exclusions regarding sectors or specific stocks. And I would be in favor of continuing in that fashion and engaging with our managers about these issues. I would never want to sacrifice return on investment. I know our responsible investment is a very significant issue, and I'm hoping we will be moving forward in that direction. I also think that we've always got to be mindful of our stakeholders. And I think to a degree, there's a lot of this already happening in various industries, such as BP is now calling itself an energy transition company. So there's a lot of recognition within these industries that they have to change to survive. And I think the idea of engaging rather than restricting is a very sound one. Thank you.
Thank you, Patrick. Yes, I must admit I'm inclined to agree that we don't want to take things off the table if we don't have to. It seems silly to limit one's sort of sphere of operation. But then let me hand over to, and also may I just say, just responding to single issue fanatics, and God knows we've got plenty of those in Surrey, is not necessarily the way to run an investment strategy. But I'll pass over to, I've got Daniel, you've got your hands up. Are you going to deal with this, Daniel, or is Rachel going to take it?
Could I just maybe respond to the bit about whether we've got conflict between partner funds, and then I think between Jane and Daniel. Jane, obviously, as you all know, is our resident head of responsible investment expert, and Daniel is the formal owner of the responsible investment policy within Border to Coast. So I'm not sure how we ended up with me being the person whose name was against it on the agenda, but that's fine because we all think it's important. Just in terms of this point about conflict, just in point, yes, absolutely. This point about conflict, at the moment, we are not seeing conflict. And I think all of us have really welcomed the challenge and the leadership that South Yorkshire have provided in the responsible investment space throughout, since Border to Coast has been set up. Indeed, that's where Jane came from. Obviously, there's a lot of work for George and South Yorkshire to be doing to respond to the really clear goal and vision that's been set by the South Yorkshire Pensions Authority Board. And we are working very closely with George to make sure that we can understand how best to support that. I think all of us will appreciate that there's a lot of things that need to happen within the world for us to actually really be able to fully understand what this means from a long-term investment perspective. And making sure that we don't make short-term investment decisions based on poor data is one of the big challenges that we're working through with George as he builds out that plan. But we mustn't allow those things to stop us making the right decisions in the short term. I just think at the moment we probably have a situation where the metrics that might be used to evidence that we're making those right long-term decisions are not good enough yet. So it means that we have to do more work to be able to explain how we're managing climate change in the short term, because those metrics aren't quite good enough. That is not the same as saying we shouldn't address it. In that sort of context, maybe could I hand to Jane? Do you want to just, there were three main areas that I felt we needed to respond on. So the first of those was just that point about back in March at the workshop, there was consensus that we weren't going to go with the metrics route, but things have changed since then. So I think it may be worth just talking a little bit about that. The second was Eddie's specific question around the new TPI voting against chairs where companies are 0 or 1. And then the third was just the challenge that Councillor Everson raised about, is what we're doing here climate change aware enough for now, or are we risking looking like we're on the back foot in this space? Jenny, you all right to cover those three areas, and then maybe we can hear from Daniel to wrap up, if that's all right with you, Tim?
Yeah, that sounds good.
Yeah, I think from the if I do it in reverse order, what I was concerned about was that when we put the initial policy together prior to pooling, climate change was a central part of that. But obviously things have developed and moved on much quicker over the last couple, especially over the last year. And I was concerned that we weren't being probably ambitious enough in what we were saying in that policy. That a number of other pools, asset managers, asset owners have got very detailed and specific policies. So that's why that decision has been made to take that policy out of the RI policy. But just to bear with us, that will involve a substantial amount of work, and that some of the areas that came out of the Climate Change Working Party, which ended at the back end of last year, are areas that we still need to do some focus work on. So that will be being done over the next 6 months. So that includes looking at scenario analysis, looking at metrics and targets, looking at the work that we've done, reporting against TCFD, etc. So I don't think that there's any case of us causing any embarrassment to anybody on the work that we're doing. I think we've done a substantial amount of work over this last year, 18 months, and I think that's demonstrated in our TCFD report, which is on our website. That doesn't mean that we rest on our laurels or anything like that, because it is, like you say, a fast-moving area. On the area issue of voting and the fact that we've actually stipulated what we're doing in our voting guidelines and also in the RI policy, that's to flag to companies what we're doing. So I think it's really important that we're very clear to companies as to what we're going to be doing. That doesn't mean that we've not previously voted against chairs before. Previously, we voted against chair of Exxon on climate change and have done on other at other meetings. But we wanted to be extremely clear and focused as to what we're doing, and we need this so that Robeco can enact our voting policy and Glass Lewis on our behalf. So that was the reason why, and we've also shared the list of companies with Robeco to make sure that they're prepared and they can do that additional analysis ahead of AGMs next year. Then the other issue was on targets. I think there's different ways that you can look at this. In order to get to net zero by any year, you've got to know what your starting point is, and this is why we obviously want to support South Yorkshire in the work and the ambition as to what they want to achieve by 2030. There is the problem associated with just putting a target in place over a short and medium time, that we could end up divesting from companies. I think BP's already been mentioned. The likes of BP and Shell are other big emitters, which can be utility companies, which are to all intents and purposes going to be net zero by 2050, 2040 in some instances, or sooner. So we could quite easily cut holdings in those, but then we wouldn't be invested in those companies that are going to enable the world to move to a low carbon transition. So we need to be not just looking at carbon emissions, we need to be looking at other metrics and other data as well. So that's why we utilise a TPI, a Transition Pathway Initiative toolkit, to see where companies are moving, what their management are doing, etc., what their ambitions and goals are, and on their engagement as well. I recently had a joint call with the chair of the Remuneration Committee of Shell, and they've got transition targets within their LTIPs, within their remuneration policy, and we mentioned at that point that it's important that the transition metric becomes a much bigger part of the bigger metrics for measuring LTIPs. So it's about engaging with those companies and making sure when they have made stated ambitions that they've got specific targets, so we can see how those companies are moving towards a transition and kind of holding the feet to the fire to make sure that they're doing that.
Thank you, Jade. I've got, before we get to Daniel, I've got a number of hands still up. I don't know whether they're additional features, but can we have Daniel, Nick and Deirdre? You both want to comment again, and Doug. Can we have Daniel first, I think?
Thank you, Tim, and good morning to everybody. So just a few observations. So as the CIO, I'm responsible for the implementation of our strategy. So I've been looking at this and working closely with Jane on this front. So just three observations that I would make. So firstly, about a third of public companies report carbon-related data. So that's 2/3 of public companies that are not reporting that at this stage. In the private sector, private companies, the reporting standards and levels are even lower. It's very difficult for us to commit to targets if we don't have the underlying data. And I think there's going to be a huge effort for the industry to improve data over the next 5 years. As it stands today, it's very difficult for us to commit to things if we don't have the data. And secondly, you need to be a little bit careful of unintended consequences. So one of our highest carbon emitters at the minute is RWE, which is a German utility, who are committed to being 100% renewables by, I think, 2035 or 2040. So if we adopted just a simple methodology of excluding high carbon emitting companies, we would sell RWE and we'd buy them back in 5 years' time. We think that company is priced as a dirty utility company today, but it will be one of the leaders in the renewable space in the future. So for us, being actually invested with them, trying to engage with them and maybe speed up the transition away from the dirty legacy business towards the newer renewable business is probably a better way of doing that rather than selling and rebuying the company. And then thirdly, also if you're selling oil and gas or certain carbon sectors, you're buying other sectors, so just be aware of that. So one of the things we are looking at the minute is low carbon benchmarks and whether or not we should be adopting those for our internal funds. And there are some consequences that you have to be aware of those. For example, one of the big increases in allocations is in tobacco stocks if you move to a low carbon benchmark, which I know certain partner funds have quite strong views on. So I'm fully behind the rationale for what I'm hearing today, and we as a corporate are as well. Just the implementation is not as straightforward as it may appear to be. So that's just a word of caution. I would say that we are very lucky to have Jane, who is a leader in this industry and a very well-respected figure, and very happy and pleased with the ratings that we've recently got, which maybe you want to mention, Jane, because I'm not sure everybody's aware of that.
Over to you, Jane.
Yeah, I think Daniel's referring to Principles for Responsible Investment, where we joined last October, and we submitted our first reporting against the PRI reporting framework earlier this year. So we reported against 4 modules, and the highest rating that you can receive is A+. So we received A for 2 modules and an A+ for the other 2. So we didn't have to report this year either, with it being our first year. It's not mandatory, but we believe that was the right thing to do, so we could identify any areas for improvement. But really pleased with the progress that we've made and the scores that we achieved as well.
Thank you. It seems to me that this whole process is one that we're sort of all on the same kind of page, but it's a question of managing change and how slowly or how quickly we can do it. We're all trying to get to the same place. I personally have a reluctance to set sort of fixed targets without knowing quite how one is going to achieve them or what it involves to get there. But that's a personal view as far as Surrey is concerned. We're doing all kinds of work on this, and that'll be coming up at our next committee meeting. But if we come back to the report, I notice we're being asked to do 3 things. And the third one is that the committee notes the proposed areas for future developments in section 6. And if we look at section 6, it's quite short. It says work to be undertaken in 2021. One of them Jane's already mentioned, well, all of them have probably been mentioned, the development of a standalone climate change policy. So that is being undertaken. The measurement of transition risk and the implications of setting targets. Well, we just discussed that. The role of private markets, and I think Daniel has commented how poor the data is in that area, and implications of an exclusion policy if engagement is ineffective. So what we're really saying is that if it comes to the point where we really can't stand a company, we just have to get rid of them. What does that then mean? We've got to buy something else, or somebody else is going to buy them anyway. And then 6.2 says we'll also continue to develop our communication approach to enable partner funds that are to understand and oversee Border to Coast in carrying out our responsible investment remit. Well, that seems to me to indicate a pretty reasonable direction of travel. So before I come back to the recommendations in this report, I've got Councillor Doug McMurdo and 2 others who want to comment further. That's Nick and Daniel. After you, Doug.
Thanks, Chair. Yeah, I'm still a little bit vexed, and I've put in the chat button, in the hope of seeing me speaking again. I fear that we're not strong enough, that we're just going to accept the direction of travel being more important. But some of the things that have been said, if articulated and just recorded in the minutes, I think would be most helpful around this, because I know, and I've worked with Jane on these matters, independent of Border to Coast and South Yorkshire. There is a lot of work being done in this space. And I think just to word, I read with some excitement, as you can tell, the direction of travel being more important. I just wonder how we could capture something more robustly, as I've suggested in the chat.
Could we pick that up, Doug, in the, as you say, it'll come into the minutes, which can then be reflected back to, and if we do get to the point where we agree the recommendations with a request that something more robust is put as to how that direction of travel, quite certain what we're saying, but put something in the minutes to give Border to Coast a steer as to how we want them to proceed. But I am very, very conscious of the comments that Daniel made. It's all very well saying all these things, but you haven't got the data. You don't know how you do it, because if you don't know where you're starting from, you don't know where you're going to get. So I would be disinclined for us to end up with a lot of, to use an expression, virtue signalling if we can't actually find a way of achieving it. So that's where my concerns lie, not with the ambition, but with the ability to realise it. So I don't think I'm disagreeing with you, but I'm not quite certain how we change the words to get there.
I mean, if I can just quickly come back, Chair, I'm very sympathetic to what's being said, but just that with the direction of travel being more important, I don't think that qualifies what we actually think. And might I just bring out another part, because this is important, and in the case of Bedfordshire, 50% of our equities are in passive vehicles, and of course, reaching through those instruments, that this does become a very, very challenging area, as Daniel very carefully worded his statement, is it could put us in an embarrassing situation if we're too tight. But I'll leave it at that. Thank you.
Well, I'll make an observation. I'll throw it back to Rachel and Daniel, I think, because it's important, all this. As far as passive is concerned, I think we all have a challenge in ensuring, if we do have passive investments, that they are passive in a form that is not automatically ignoring all this, because passive can mean we just want a bit of everything, and that's obviously not going to work. But that's a whole other subject, I feel, passive investment. I've got Nick who wants to comment. Nick Works, and then I want to go back to Daniel and or Rachel and Jane just to get their comments. Nick?
Thank you, Chair. Yeah, I just wanted to make another point about the proposal to amend the diversity side of things, to move it beyond gender. I just wanted to say that I absolutely support that proposal as well, and I'm looking forward to see what the policy actually says. And my hope is that that it will be a policy that actually improves diversity outcomes. I don't want to see a load of aspirational slogans if I can possibly avoid it. Thank you, Chair.
Yeah, I think the paper does point out some of the limitations on getting there, but at the same time, I take the point. Sorry, Mick, can I go to Rachel? Because I know Rachel wanted to speak first.
Sorry, Tim, that were a mistake.
Okay, in which case I'm going to go back to Rachel and or Daniel and or Jane, because I think there's some bits to pick up here.
Tim, if I'll pick up on behalf of Border to Coast. I think it's been really interesting to listen to the discussion today. I think we all recognise that there's a significant momentum to make sure that asset owners are playing their appropriate role in this debate that is going to require, input and impact from right across the globe. Asset owners very much have a role to play in that. I think thank you for drawing everyone's attention to the work that we planned for next year. We certainly recognise that direction of travel, and as you sort of commented, we do want to look at some of these harder questions, and we're about to do that, making sure that we are very much borrowing on the work that South Yorkshire are doing, and other partner funds. I hope that you all know as well enough that we're not going to go off into a little room and do that by ourselves without making sure that we are fully engaging with partner funds in that discussion. So I'm very welcoming of the feedback that we've heard from some today, that actually being clearer about the direction of travel rather than just talking about it being positive is something that's important. But I do think it is important because I know that there are other partner funds who have real concerns about setting targets for some of the reasons that we've also touched today. So we will go through that process with partner funds next year as we build out that climate change policy and make sure that all partner funds' voices are being heard in wherever we get to in that process.
Thank you, Rachel. It does seem to me that this is an awfully difficult thing. We've got sort of 11 funds and you, and we're all sort of struggling around in the same direction. We're all going in the same direction, but some are a bit slower, some are a bit faster, some are a bit different, and somehow or other you need to encompass all of that. And I'm not quite certain how easy that is to do. And it's obviously not easy, otherwise we'd do it if it was easy. So good luck with that. Daniel, do you want to comment any further? We haven't said you do, but I just wondered if you did.
I just to comment that we have got an active project looking at whether or not low carbon benchmarks would be appropriate for internal funds, and that's ongoing in 2021 as well. So this is an area that's at the top of our agenda to review further.
I've got no other hands showing. So can I therefore go to the recommendations, which are, and I'm going to read them out, that the Joint Committee reviews and comments on the proposed revisions to the RI policy and corporate governance and voting guidelines. Those are the two appendices that we all received track changed copies of those. I assume everybody's got them. I haven't heard any specific comments on those two documents. If there are any, then I sort of pause to see if anybody's got something special they want to say. Otherwise, I think we can go with that. The Joint Committee supports taking the revised policies to pension committees for comment. And I know this is coming up on our pension committee on December the 11th, and for them to consider adoption of the principles in their own RI policies in line with industry best practice. This is asking us to take what's being said here and agree it within our own committees. As far as I can see, it doesn't contradict. I don't know. It doesn't contradict anything in the Surrey one. We may want to do some other things as well, but it certainly doesn't contradict anything that we're doing. So that is a recommendation we're being asked to approve, and then we're being asked to note the proposed areas for development in section 6, which we've discussed. Can we go with all of that? Does anyone have any want to say nay on any of those points? I'm getting a surprising dead silence, so I'm taking that as silence is consent. So we've taken those recommendations and done that noting. So I close that item at this stage. Thank everybody very much for their input on that. Which brings us to item 7, if I can find the agenda, which is, Daniel, the summary of investment performance and market returns, which is basically for information and read only. I don't know how much we want to discuss this now, but over to you, Daniel.
Thank you, Tim. So I'll keep this relatively brief. So when we met in March, I mentioned that the reflationary policies by the central banks and fiscal stimulation by the treasuries were going to reflate equity markets. And we saw the speed and strength of equity markets recover, really reflect the speed, size and breadth of the programs that were on offer, which were generally a lot larger than expected. So to put that in context, the amount of monetary stimulation was about 2.5 times what occurred during the global financial crisis. And the amount of fiscal stimulation was more than 2 times. So really large responses. There were also broader responses with the US Fed buying corporate debt, including high yield debt, and the European Central Bank acting within weeks, whereas after the last crisis, it took them years to engage in quantitative easing. So very significant stimulatory programs, and these really have had 2 big impacts on markets, which are atypical for recessions. The one, household saving rates have gone up substantially. So in other words, the fiscal programs replaced a lot of the lost income across economies, and the reduced spending by consumers meant that consumers have been building up cash balances. And 2, they allowed credit spreads to contract very, very quickly. Markets normalised a lot faster than expected, and corporates have been on a huge borrowing spree, but they haven't been spending. So again, the corporate sector has had a build-up of cash. So effectively, the increase in debt loads has been reflected by increased cash balances on corporate balance sheets. So the size of the increase in the savings rate and the size of the corporate cash balances are quite significant. We're likely to see a US fiscal deal, potentially part before Christmas and part after. Latest estimates are $1 trillion instead of $2 trillion. We're likely to see ongoing monetary stimulation, so the Fed are likely to extend a maturity extension in their December meeting. So as we look into 2021, we have low inventories at the corporate level, very high cash balances, about 5 times the normal level at the household level, very high cash balances at the corporate level, ongoing monetary stimulation combined with fiscal stimulation thereafter. We've also had 3 vaccines been approved, the first time we've ever had vaccines against a COVID infection. We've got another 6 to come in the next quarter next year. So I think that the markets and the economy are probably well set up for 2021. and it might be a surprising environment for people. I've shown on here that equities generally in 2021, the earnings have held up better than people have expected, and that there's been quite a lot of divergence between different styles and different sectors. So the tech sector outperforming, financials, industrials and energy underperforming, and styles are over a 30% difference between growth stocks and value stocks. We've seen that starting to reverse the last couple of weeks. And then just got a summary of our fund performance for all our funds over 12 months track record. You can see the composite of our internal funds is in line with expectations. So a 1% performance over benchmark, and our one external fund, which is over 12 months, is also in line with expectations. We'll talk about the global equity alpha in the private papers a little bit later, but happy to take any comments on the paper or answer any questions. Thank you.
Thank you, Daniel. I think the Chinese say maybe we live in interesting times, don't they? Which we certainly are. Do we get the feeling, before I throw this open, that next year there's going to be a sort of sudden, a pretty rapid boom of activity, provided we get out of the COVID, and that things are going to grow much more markedly than people might have thought before, and that we might end up with that famous word inflation again, or not? Do you think the quantitative easing is just going to kill the inflation?
Yes, I think in 2021 we've got low base effects for growth and inflation, which means both of those could go up more than probably people expect. And thereafter, it's going to be the balance between the amount of stimulation in the economy and the output gap. So the output gap, the pickup in unemployment and spare capacity, being very deflationary, and the stimulative policies. My bet would be that we're going to see higher inflation over the medium to long term, which will impact your liabilities and your asset strategies. So that's how I would be positioned as a long-term investor, or starting to think about.
Thank you, Daniel. Patrick.
Thank you, Tim. Daniel, I'm just curious, are you concerned about the massive levels of public debt that governments are getting into around the world, and how that will affect the economy moving forward, and thinking in terms of sort of tax rises, etc.?
Yeah, I think there's not a lot of appetite, I'm told, for austerity going forward. So I think the fiscal stimulation might carry on longer than people expect, and even once we're through that, maybe goes back to a neutral level as opposed to a restrictive level. So what we saw after the last crisis was loose monetary policy with tight fiscal policy. Now we're seeing loose monetary and fiscal policy. I think at some stage fiscal policy will go back to neutral, but it won't be deflationary. I think when you look at debt levels, they are high, but when you look at debt levels in 1950s after World War II, they're a lot higher than what they are today. And basically what we got then was central banks managing the situation by buying long bonds to keep the rates down, keeping rates low, and running very negative rates. So if you wanted a template for how the next 10 years might pan out, the 1950s is probably quite a good historical example. So negative real rates, and then negative real rates and continued financial repression by central banks.
Thank you.
David?
Yes, thanks, Tim. From what you're saying there, I mean, we can all argue that austerity which hasn't ended really, but we're now going into a different phase where you have a different 10 years where the central banks have acted a lot quicker, as you've just said. The governments perhaps have seen that as a benchmark to look at and said, right, we're going to stimulate this. It's a different sort of ball game. I think from what you're saying, investments are now going to be a long-term thing. You're going to have to look at which areas to go at, which areas of growth. Next year, okay, inflation, deflation, whatever. I mean, what are your opinions on things like sovereign wealth funds, which are going to be controlling an awful lot of this? Do you feel that they will have a bigger control over this, where they had the money in the first place, as Saudi and places like that divest from oil? They're going to be huge players in the market. What's your opinion of that?
Yes, I think just on the fiscal side, we've seen a structural change that happened actually pre-COVID. So the US running a very large structural budget deficit in a economic boom time. So that's the Trump tax cuts, and then added to that, you get the current situation, which blows out the deficit further. So I think countries are going to struggle to get those deficits back in line. When we look at sovereign wealth funds, or when we look at broader economic trends. So 2020 might be a blip in the longer running trend, which is basically investors search for yield, search for income in a low rate world. I think we're just extending the trend that we've seen already. So that probably continues to push people into private markets and alternative asset classes, continues to push people into high yielding credit. Probably means that equities are sort of more bid than they otherwise would be. And at some stage, I think the private sector may start to reduce their allocation to bonds. For the sovereign funds, they've generally been big players in the alternative markets for the last 10 years. I think you've got some changing dynamics where the surpluses are going to shift between funds. So some of the surpluses that you're seeing in the oil exporting countries are going to probably be a little bit lower going forward because of both cyclical and structural changes going on there. But I think the trends that we see over the next 5 years are similar to the trends that we've seen over the last 10 years. But probably a little bit more negative for fixed income and inflation vulnerable assets.
Thank you, Daniel. Do I have any more? Basically, we're being asked to note this report, and it's a reading and noting as an overview of the extraordinary situations in which we live and how we're going to go forward. Does anyone have any further comments? Otherwise, I will consider it read and noted. Thanks, Daniel. I think that brings us to the end of part one, and I'm now asking to public and press. So the Daily Mail can get out of here now if they want to. Well, they've been here, but I don't know how many members of the public there are. I can't tell from the little circles with the initials in if anybody's from the public. But can we electronically exclude them, Sean? Or do we think everybody's here should be here?
Chair, I'm just stopping the live streaming of the meeting, and I'm stopping recording the meeting too.
So we are now in private.